What's going on, folks? Welcome to the Trade Well podcast, brought to you by Trade Well Management. I am your host, Donovan Marquez, the podcast where we discuss everything trading these financial markets, as well as acting as a personal trading journey and road to profitability. Thank you for tuning in, and I hope you enjoy the show. What's going on, everyone? Welcome back to the Trade Well podcast. I'm Donovan Marquez, and I'm glad you're joining me for episode 3. If you've been keeping up with the series, we've already covered what day trading is and compared it to other trading styles. Now today, we're going to dive into something super important: tools and strategies that day traders like myself use to make smarter decisions. Now, if you've always thought, how do day traders know when to buy or sell? You're in the right place. We'll talk about the must-have tools every day trader needs, and I'll introduce you to some basic strategies that may help you maximize your chances of success. So grab a coffee, sit back, and let's break it down in simple terms. All right, let's start with the basics. What tools do you need as a day trader? First up, let's talk about trading platforms. Now, what is a trading platform? This is a software or a website where you actually make your trades. It's kind of like your command center, if you want to think about it that way. Some popular ones you might have heard of, maybe TradingView, Thinkorswim, something like MetaTrader if you're big in Forex. I myself use NinjaTrader, love their platform. But these platforms let you buy and sell, but they also come with tools like charts and indicators that help you analyze the markets. The key is to choose a platform that's user-friendly, fits your style, and doesn't charge crazy fees. Now, if you're just starting out, play around with a few different ones first. A lot of these platforms offer demo accounts, so you can practice without risking any real money, so you can get the feel for not only what trading is like, but what that platform operates like, if that makes sense. But next up is charting tools. Charts are where you'll spend most of your time as a trader. If you've been watching my YouTube channel, I post my charts and trades every single day, and you can see that stuff, all those squiggly lines and crazy looking bars on the screen, those are my charts. But they show you how the price of a stock or currency is moving over time. By looking at these price movements, you can spot patterns and decide when it might be a good time to buy or sell. Many platforms like TradingView, for example, come with built-in charting tools that are easy to use. But the important thing here is to learn how to read the charts. This is what helps you see where price might go next. And finally, you'll need news and data feeds. Price movements for some reason, right? Price moves for some reason, right? News is often the reason, whether it's earnings reports, economic data, or even a tweet in some cases. News can cause price to spike or drop really fast. Keep an eye on the news. Helps you stay ahead of big price moves. Now, many trading platforms have built-in news feeds, or you can use apps like Bloomberg's and stuff like that to stay up to date. But those are the core tools. A good trading platform has charting tools and access to news. Now, let's talk strategies. Okay, now we're going to get into the meat of this stuff. So now you've got tools, right? Let's talk about some simple strategies that day traders use to make decisions. Now, one of the most important strategies is called scalping. Scalping is about making quick, small trades. You're not holding on to anything for a long time or even just a few minutes, maybe even seconds. The goal is to grab tiny profits multiple times a day. Let's go ahead and kind of give you a little breakdown. Let's say a stock price moves up by a few cents. You buy in, you hold for a minute or two, and then sell it when it goes up a bit more. With scalping, you're looking to make lots of these small trades throughout the day. The profits might seem tiny at first, but if you do it enough times, they add up pretty quickly. And it's all about speed and taking advantage of quick price changes. Another strategy is what we call momentum trading. This one is a bit different. Here, you're looking for stocks or currencies that have already moved, and maybe they've had big news or a breakout, and then you jump in to just ride the wave. For example, if a stock starts rising really fast, right, you might buy in and ride the momentum until it starts to slow down. The key here is to get in at the right time and make sure you exit before the momentum fades or comes back down. It's like catching a wave when you're surfing. You want to ride it as long as it's a strong wave, but get off before it crashes pretty much. Another really beginner friendly strategy is a breakout strategy. And this one's pretty popular among a lot of traders. Here, you're looking for a stock that's been stuck in a certain price range for a while, and you wait for it to break out either above or below that range. When it does, you jump in, expecting the price will continue moving in that direction. Let's give you an example. Let's say a stock has been bouncing between, let's say, $50 and $55 for a few days. If it suddenly breaks above 55, that's the signal it might continue to go higher. So you buy in. Or it drops below 50, you might sell or even do what's called shorting the market, which is betting that the price will drop. All of these strategies require practice though, and none of them are guaranteed to work every time. But understanding these basic approaches can give you a good foundation to start experimenting and figuring out what works best for you. But now that you've got the tools and you've got some strategies in mind, but here's the thing. None of it matters. Absolutely none of it matters if you don't manage your risk. Let's talk about why risk management is a big deal for day traders. I put risk management at the very, very top of my list. In day trading, losses are part of the game. Not every trade is going to be a winner. The trick is to make sure when you lose, you don't lose too much. This is where risk management comes in. One simple way to manage your risk is by using what's called stop loss orders. A stop loss order, if you're wondering, okay, so let me go ahead and break it down for you, okay? A stop loss is an order that you set up to automatically sell the stock if it drops to a certain price. Now, let's say you buy a stock at $100, but you don't want to lose more than $10 per share. You set a stop loss at $90. If the stock falls to that level, the platform will automatically sell it for you, protecting you from any further losses. Another way to manage risk is by controlling how much of your account you risk per trade. A common rule that is called the 1% only risk 1% of your total account on any single trade. This means that even if a trade goes wrong, it won't wipe out a big chunk of your account. What most people don't talk about in trading, yes, there's numbers everywhere, but it's really, when it comes to risk management, a percentage game. And finally, don't forget about the emotional side of trading as well. Sometimes when a trade goes bad, it's easy to get caught up in trying to make back your losses. This can lead to overtrading or making poor decisions. The key is to stick to your plan. Keep emotions in check and remember that not every day will be a winning day. That is super important to remember, guys. I've been at this for more than a couple years now, and I have grown comfortable with losses. They happen and it's a part of the game. But risk management helps ensure that when things go wrong, and they will sometimes, you can come back and trade another day. But guys, That wraps up today's episode. We've covered the essential tools you need as a day trader, some basic strategies to get you started, and also why managing risk is so important. Whether you're just starting out or already have some experience, having the right tools and strategies in place is going to set you up for success in the long run. But in the next episode, we're going to dive deeper into some of the more popular day trading indicators and how you can use them to spot opportunities in the markets. Trust me, you won't want to miss it. But if you found this episode helpful, please subscribe and share this with your friends and leave a review because it helps us reach more people who want to learn about day trading. And don't forget to follow us on social media to stay in the loop, guys. But as always, thanks for hanging out with me today on the Trade Well podcast, and stay sharp, stay steady, and trade well. We'll see you on the next episode. That's all we have for you today, folks. Thank you for tuning in. I hope you were able to gather some information and value from this episode to apply into your own trading journey. Don't forget to give us a rating and review anywhere that this podcast is hosted. Also, please don't forget to like and subscribe to our YouTube channel at TradeWell Management, where we upload our daily trade videos and a full time-lapse, unedited raw time-lapse of our daily trades so y'all can see what real day trading looks like. Thank you for tuning in. I hope y'all have an awesome day.